Well, good evening, folks. Hey, it is Shooter. We are going to go over swing trade notes. And let me tell you, actually, this was probably the busiest day I've had in a while looking at charts that actually had a lot of stuff that looked good. Usually I run out of 3-4 hours max and I run out of things to look at. I still have charts to look at. All right, well, it's Shooter, of course, Scott Henderson. At the end of our presentation, please do review our disclosure. Well, we're going to take a look at swing trade notes, but first, market sentiment. We have an FOMC meeting ahead of us, which makes it very challenging, and I think we were here last month, maybe even the month before that as well. I'm not specifically recalling it, where I had a lot of setups going into FOMC. So I'm looking at it as we have two boxes this week: quarterly long looks and some weekly looks, which basically are using the daily charts. So we broke that up this week. Then we had one continuation play that I threw in there. So let's jump right into it. Last week was pretty decent because I really loaded up on AST Space Global once we hit my 24 bucks. Now that is a perfect scenario. Now, the bad news is I expect to bounce to about 32 bucks. Then I have a count back down at $12. So at 32 bucks, if you're holding long positions, I think it's prudent to hedge. So, hey, that would typically only go into swing trade notes. And by the way, like and share this video. It does help, but that's also a plus market conditions. And there's a number of things that we follow that help us stay on the right side of price. Please join us in fundamental trends. What's called the rare subscription. All right, earnings, light week. I sort of like FedEx, this HITI, actually looked pretty decent, but I didn't throw them in there. And LULU, I think, does well. So now Cracker Barrel, I think it'll flush because those types of restaurants have been struggling. And I remember some kind of comments about them possibly closing stores. So that's my thought. All right, this week we have a lot of continuation plays. October 10, we have a huge event with Tesla. We're going to run into that. Now, I'm going to give you another tip here that I would normally say just in chat, in rare. Tesla is almost always buy the news, sell the event kind of thing. So I'm hoping Tuesday, maybe we get a turnaround Tuesday, I get to buy it at $215 because now I'm not going a month out and paying that premium to really get to that October 10 event. So I'm thinking I'll dump them around October 8th or 9th is my thought. So then maybe I can get some $250 October calls, at a decent price is sort of my thought. So, but we also got some Mag 7s that look decent. Google has no divergence, but I still like it. We might go there for a continuation play. Apple, Microsoft, I notice I have it in there twice, sorry, Restoration Hardware, XRT, which is not something I typically look at nor trade, SERV, now just straight up, the options stunk on that, so it's a common share play. Uber looks good. I still like AVGO. I just need a pullback from where we are. FedEx, again, was Thursday, Airbnb, and XOM. So now the 50% back plays, CMA, Lulu, SMCI, MPW, Redfin, Bros, and Rocket, right? So let's start off with Rocket Lab. I like this look. The count does not support what I'm seeing on the Fibonacci. It's not unusual. It happens about 30% of the time where you have conflicting indicators. So here's my sales job on why I think Rocket Labs breaks out here. Okay, the prior candles going into this. That's a lot of FOMO coming into this, where we typically don't have that. They had 57 million shares come in there. It's not a highly priced stock, but still decent number. We've not really seen that bullish of a move even here like we're seeing here. So there's some FOMO here, and this could have a lot to do with the fact that that Starbase ship or whatever from Boeing landed, didn't blow up. Also, the AST Space Global had a successful launch. So this might be, a little hysteria over success, but I still think it goes. I think it's worth the risk. Just know where your stop is. We closed below the base of this flag. And the way I look at this flag is this is the flag, this level here. That broke above the flag. So we closed below this off number at that 656. And there's a chance it goes low. So that really is where your stop is in detail. That's Rocket. Okay. So now we like the January $10 calls. One, because there wasn't a huge spread on. I hate paying spread. Yeah. 12% irritates the death out of me, and I'm surely not going to pay 30%. However, I regret often not paying the 30%, because with how often I pick a stock going in the right direction, obviously I lost money not taking the trade. So, all right, looking at Comerica, nice consolidation, ascending wedges. Nearly always 79, I think, percent of the time they break out. Count supports it. So I'd add above 58.19. Go back to my notes. I'm not remembering what I had on there. So I like the November $65 calls now. My comments in there. And then add above that 50. So I think we're definitely going to break out, and our 3 is up here. I'm going to the 50% back. This is a fib extension tool, by the way, for those of you who don't know. This is something I prefer because it measures the cycle. Cycle, trough, peak, trough, the whole cycle. So I'm not missing a piece. If you just measure this last leg, what about the volume that occurred on the ramp up? You're going blind as far as I'm concerned. I vary it often, except for with a 50% back setup. I'm only measuring the portion of the leg which we're going to. And honestly, if you measure B to C, we're at 50% back right now, but I like the look of it. I really did. That's all there is to it. I like the look of it more so than for other reasons, just there's more consistency. On that, we also have some divergence in the RSI diagram. So let's look at Medical Properties Trust. Now, we nailed this from the lows. I think it was 390 or 389 or something like that when we started flagging and public. Now we're at the breakout line. Nice FOMO last week. I don't know why I didn't chase it, but I saw it like Tuesday, maybe even Monday. Didn't add it. Probably should have. Now, we have this 3, which we're overshooting right now, by the way. This primary wave 3. We're overshooting it right at the breakout. Went to the breakout line, rejected it. Just a little bit, but closed on a high side of the candle. Look at these volume pushes in here, and then this volume came in on this candle. So if we get another follow-through candle, we should get a decent volume, maybe around 120, 122 million shares come in. I don't know that 4 prints here. There's a very good possibility. Notice how shallow 1 here is and how long 2 is. Typically, when you get those, you get what's referred to as an elongated 3, and that typically is the length of 3 of 1. 1, 2, 3, which would put us up close to our swing target at $8. Then we back test the breakout at that level. So there's a very good possibility. In my view, we're going to overshoot here, or that's my thought, and I'm willing to take that risk. Obviously, market strength is a factor. Now, with Medical Properties, I like the December $9 calls. All right, so it's just a little bit above what we're projecting our target. All right, now let's look at CPNG. Now we're above the breakout line, back tested it. Good thing. Really just the structure there. FOMO puts this, large ABC pattern. So this was A, it's going to be B, and then I'll put it in C. Way up at $46. I like the upside here. I just like the look. I look at this. Look at the volume that came here. And this, look at this. This was just a green candle that turned red. So in other words, we had some huge volume come in here, then it sold off. A lot of people sold right there. Don't know why, but they did. Then we came back and with not quite as much volume in total, but we took it all back with 2 nice candles pushed up. And then our flush, look how shallow we came off. And we basically put in a low and we bought it all back. These are all very bullish looks to me on the candles or the HCL bars. So 50% back of this B. I didn't measure A. Okay, I just measured B. So realistically, 50% back could be as high as 40 or 45. But because of the ABC pattern, I stayed conservative and just measured 50% back comes in at 27.49. I think it's very viable. We're at $23. November 25 calls. Now, I like a mix. Reason is I'm trying to defer some risk out a little bit more in time, so I'm paying less premium for certain strikes. Typically, I would normally do a $30 strike with this look, but being that we have FOMC coming, I want a November 25, about 40% of my position size, and then $30 calls, about 6. That's my thought. Now, stop. I like it down here right around 20. So basically close below $20 on out, and then I might try and reload that anyways. That's something I've learned recently is that a lot of stocks that I like, turn around and actually hit my target. They just flushed a little bit further because of the volatility in the market. So, that's been quite challenging for me. I put up, weeks and weeks ago stocks that failed to move and I didn't put a piece on, fell just a little bit short of targets or hit targets or exceeded targets, then back test and gave us a second shot. Now, LULU, I've been watching for weeks because when this thing gets some FOMO, it likes to run. It is a great day trading stock. Now, it's an ornery beast. This thing can take you out really quick, but I think we're pretty much oversold here. The thing I don't like is this little wick or this push down in RSI on the week. It's confirming way down here, like an overshoot. Okay, so I have some question, like I always do. I think of both sides of the tape. Well, why would it be doing that here, right? Confirmed divergent low. So confirmed here, another divergent low, and then put one more in. So not quite seller exhaustion here, not quite seller exhaustion here. I mean, no real extreme seller exhaustion anywhere on this leg lower. So now this is a 5 wave, so we could come in and do a 5, 3, 5 down. We could do that. You could do so. In thought, I think go with about 25% of your position size, normal position. When it gets above that 275.04, add. Okay, it closes below that 250.07. Whatever quarter 25% position size you have, take half of it off. Don't close it, because then we're going to reload down here at this 2. And I should see the divergent low pretty clearly as long as I'm watching. Unless I get, you have to forgive me if I get tied up looking at something else. But obviously, you got a chart in front of you too. And you can put an RSI chart up there. By the way, we're running an 8 period now, not a 14 period, because Kirk wanted me to change that. Took me a couple weeks to get used to it. It still works. I haven't back tested it because I don't want to know if it's better or worse. But we will at some point. All right, so that's my thought. Now, I like the November 300 calls and the January 350, 40% on the November, 60% on the reason being is if we're going to turn here and this will be one of the stocks always catches a bid. RSI, I just can't avoid where we are in RSI. It looks to me like a nice up. Gets a lot of flow, a lot of day traders trade this puppy. So, we get this little push up here. There's a good possibility that I hold those January calls at this cheap price, by the way. They're cheap right now, cheap. So I might hold them all the way up to that B versus my swing trade target. So that's sort of my thought. Now these weekly charts that we are looking at are what I'm classifying as my quarterly look at the stock. I think they're more of a longer term swing trade, which I've been trying to migrate to anyways, because that little flush that we got sort of took some of the risk, I think, off of the market. But I will say this, since we did not have at least a 382 back test, like I've said, or I said in primary waves, the likelihood of a flush on a market event is pretty. So make sure if you get too much exposure long, I'm going to suggest a hedge with SQQ, just build a little position in there, 1.5 to 3% of your risk capital. And, some of these stocks are already overdone, right? Like, for example, MGM here, drive 1, drive 2, and then we overshot on drive 3. That pretty much implies that we're done. However, we confirmed on this drive, and this is a divergent, well, not confirmed. We had a lower low in price and a lower low in RSI, and a lower low in price and a higher low in RSI here. So I have some decent conviction that the bottom's in, and plus we're in this band. So our upper zone is about $50. Our low side is about 30. I don't think we get that. Even though that band comes in really a little lower than that. But obviously, I'd like a tag of that. If we fall below this 34, and I'm giving it a little more room than I typically would give MGM, only because that's really the only. I mean, we could go to this off. There's, I'd rather give it some room. Sort of like Monster. That. Is something where you got to give that one a little room. MGM sort of similar. But I like the December $40 calls here. Not a lot of room to the upside, as far as the tape here. It's only about a $2 move. So, I'm just looking for 25 to 40% on that. And that's where I'm. All right. Now, the Qualcomm is one of our weekly setups. I like the October 170 call. Swing target is 180, 124. Nice look. One of the prettiest charts here. Clean divergence off of this low. And, confirmation on our low and divergent low here. So stop below the intermediate wave 2 at 157.13. Cut and dry. Bread and butter kind of setup. Just love this kind of look. Nice upside. Roughly, what is that? 13, 14 bucks to the upside if we get that. Beautiful thing. Now, I like the October 170s because I'm staying tight, because if the market turns, this will come off. Just points. All right. Now, Airbnb. Now, those of you who remember this, I was chasing this puppy all the way up over here. It broke down. I just didn't chase it. This leg, I looked at it. And then right here, I looked at it again. I didn't take it. Whatever reason, I don't. I get tired when stock doesn't do what it's supposed to do when I guess. And I go to something that has more conformity to Elliott Wave. And you'd think they'd all be the same, but they're not. There's some stop, like Bitcoin. I mean, it's like perfection becomes, there's one of your 3 outcomes is what it is. We have some nice divergence at the gap. And notice this confirm low with really oversold here. And then we get a nice divergence. Now we've put in our first higher low. So the better entry, because of the wave count, is at $115. 117.35. So this may be next, but price is 117.78. So we were within $2. You know, as I say, what's a couple of bucks in price versus miss? So I'm going to probably put a piece on, at the opening range Monday, maybe Tuesday. I want to watch what volume comes in at, because that's the only thing that's flat. But look at what we've done here on the RSI being flat in volume. So if anybody sees this and sees this gap and looks like, you know, because there's going to be a couple of people that chase gap fill. We got another gap up here and another gap up here. Usually you get the second gap fill. Quite often starts getting chased, and Airbnb is one that gets chased. So, you know, hey. And on top of that, this should benefit from a positive FOMC meeting. So I'd like to have a piece on. So November 125 calls. Haven't decided where I'm going to add yet, but that's sort of my look. I just went up there. I didn't want to pay a lot for it. You know, again, I'm going to try and skip. All right, let's look at Jasper Therapeutics. Now, typically, I don't trade therapeutics, you know, or pharmaceuticals with swing trades because they're so unpredictable, all right? But I really like the volume, and I like the flow on this. So I had a couple of factors that sort of implied that I like it. So I'm like, really nice back test. The confirmed low came in about right here. Divergent low, two divergent lows, divergent pushes on the daily candle. Nice, pretty solid low. My stop would be where this broke out. So we get back below this because this was our initial push. Retested it, held, push up, tested right to it. Right to it again, then it failed. Third drive failure there. And you can see it right in the RSI structure, and then it put in this bottom. Usually it does that on the opposite side. So this is drive 1, right? We're getting a divergent drive 2. So I'm thinking divergent drive 3 at a breakout line. Yeah, maybe I have to trim this at 25 if I don't like what the RSI looks, you know, drilling down. So I like the November 25 calls because I want to stay right, close, tight in the money. And then the 30 calls. And again, sort of a spread, do like 40% in November and about 630. Now, count says a better entry is at $20.11. That's not what this tells. Low, right? Now, put in another low in RSI with a higher price. So this is clearly telling me we're not clear, right? Notice this FOMO here. Look at how far up in the RSI it is. Look at where we are. So this kind of FOMO, this leg is potentially where we're going here. I haven't even looked at the micro or macro on Jasper, just the chart. The different patterns, the different legs, what they look like, where there was FOMO. Now, look at this volume candle here coming off this low. We hit this low. They came in and heavy volume that was here prior to. So we could, you know, look at the volume. Look at the volume structure here. We got a couple more candles very similar to this. Same volume touch, sort of squeeze going on, getting us going into this, right? Sort of the same look, little broader in time, but I think we could blow past this count. So, you know, I probably will roll some out. And this is one that I think I will. So that's what we have for this week, folks. Sorry it was so long. I've got a couple more charts I will post in chat in Rare. And again, like and share, folks. It really does help us, you know, as far as our time frame. And outside of that, great trading until next time.